Hello, and thank you for joining this monthly update on AVI Japan Opportunity Trust, particularly to our new shareholders who have joined us from Fidelity Japan. In December, the Trust delivered another month of positive performance. Net asset value rose by 1.9% in sterling terms, while the MSCI Japan Small Cap Index fell 1.1%. This closed out a strong year in Japanese markets, where the fund rose nearly 15% in absolute terms, while the benchmark was up nearly 20%. Performance in the month was driven by stock-specific outcomes that showcase what this trust is about. The two largest contributors were Synchro Food and Broad Media, both holdings where our constructive engagement is progressing well. The main detractor was Aoyama's ASAN Networks, after a cut to revenue guidance, but our fundamental thesis there remains intact. At Synchro Food, the share price rose 22% in December, adding 84 basis points to portfolio performance. Following an extraordinary general meeting requested by AVI, our head of Japan research, Kaz Sakai, was appointed as an independent director, while two internal directors were removed and a new CEO and chairman stepped up, strengthening governance and strategic oversight. For detractors, Aoyama's ASAN Networks reduced guidance for full year 2025 revenue, leading to the share price falling 16%, detracting 72 basis points from performance. The revision was due to accounting changes, and we remain confident that the long-term structural growth drivers are still in place. In December, AJOT substantially deployed the capital received from the merger with Fidelity Japan Trust, which completed in late November. By year-end, well over half of the rollover capital has been invested into both existing and new portfolio names, and as I record this, we are now fully invested. Looking ahead, our constructive engagement strategy is unchanged. AJOT now acts as a major shareholder across many portfolio companies, building meaningful stakes to unlock value, not only through capital efficiency, governance, and investor relations improvements, but increasingly by driving enhancements in core business operations. We expect this broader, more operationally focused engagement to be a key driver of value creation as we move into 2026. The macro and regulatory backdrop in Japan remains a powerful tailwind. The Financial Services Agency is currently reviewing the Corporate Governance Code with a clear emphasis on improving capital efficiency by encouraging companies to reinvest surplus cash in their core businesses and return more capital to shareholders. We look forward to the outcome of this review in 2026 and believe that accelerating corporate reform will continue to create attractive opportunities for AJOT to unlock substantial value on behalf of its shareholders. Finally, a quick word on the annual redemption opportunity, the results of which we announced on the 14th of January. Approximately 27 million shares were tendered, representing 11% of issued share capital. I thank you for your continued support.